And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
Welcome to the party. Welcome to the CFP, Certified Financial Planning Party. Contrary to popular belief by Lance Roberts, planning can be fun. Maybe. I'm not sure. Rich Rosso, Danny Ratliff. Thanks for being here with us this morning. I know we had a rough day in the market yesterday. And I know the Fed just sort of kicked the knees of Nvidia. Just when you thought Nvidia drives the market, you find out, no, it is always and always will be the Fed. But the worst news from yesterday, Danny, is Cracker Barrel stock has been in free fall because the biscuits and gravy chain is just not as relevant as it used to be, according to the CEO. In other words, it's 54 years old, and its clientele is 104 years old. So they're saying, I think we're going to have to spend some money over the next 3 years, $700 million, to fix some of the problems, update its menu, marketing, refresh the interior and the exterior. I, for one, like the interior, but okay. So I guess just too many old people are going to Cracker Barrel. What do you think?
I think the problem is that everybody, it was nostalgic. It's like, what was the price of milk in 1950? And, it was, or a car or whatever it was. And people enjoyed looking back on those times. I don't think anybody enjoys looking back on the last several years, and nobody's going to bring that up.
Yeah.
So you're also right. I think they're aging out of their demographic.
They are aging out of the demographic, and some of those recipes haven't changed over the years. It just shows you how businesses have to consistently evolve. What would you, maybe you need to change the name.
I don't know.
What do you call it? No crackers in the barrel? No crackers allowed to eat here?
Should be like Butter Barrel. Isn't everything just covered in butter?
They have a great breakfast. They really do. But yeah, like when you walk in there, like Brent would walk in there and so he'd pass a table and a guy would go, "Look at the youngins coming to eat here." So the stock is off nearly 20% since the call, but I think it's encouraging. The CEO said, listen, we got to make a change. We got to go with the times, right? Probably everything in there is racist, so you got to take it all out. Fireplaces are racist, wooden chairs, so you're going to have to add in some other stuff. What do you think, Brent? Needs a new revamp?
I kind of like it the way it is.
I knew you'd say that, Brent Clanton.
Brent goes to Cracker Barrel to feel young again.
I actually don't.
No?
It's like a tourist trap when you go in there.
I like the shop.
I'm not going to tell stories of my wife or anything, but she goes in there. It's an hour and a half before I get her out of there.
Well, she goes in the shop, right?
Yeah.
The little shop and looking around. We do that too.
Yeah. I don't think we've been with the kids. Michelle one day said, we need to take the kids there. I said, for what? I said, that's going to be, that's an event in of itself.
Yes.
I think it's fun to go through the shop and have the kids sit by the fireplace.
About once a year I can do it.
Yeah, they have some good meals. But listen, it's not the healthiest food. And I can't see Cracker Barrel going vegan. That's just not going to work. So they're going to have a hard time.
Yeah, that's not going to happen.
It sort of reminds me like of IHOP a little bit.
Cracker Barrel reminds you of IHOP?
Well, it's that traditional kind of food. It's like biscuit,
yes.
Eggs.
It's the Americana menu.
Yeah,
same color
and nobody likes America
setup.
Anymore, unfortunately. So you can't have the Americana menu anymore.
Well, you know what? If this guy wants to modernize Cracker Barrel, what they'll wind up looking like?
Oh, no.
Buc-ee's.
Oh, well, I don't know.
Pretty much the same stuff in both places.
Oh, man, you're going to upset those little
I
ladies
know.
that sit out front in those rocking chairs
But I'm telling you.
when they walk in there. They They see like wrappers on the wall and stuff.
You look around, the little knickknacks and stuff.
All gone. All gone. Hey, listen, before you do that, can I get in there and take some of your stuff? Because that's the decor of my house. So it just shows you that, and the reason I'm going to make this huge segue to NVIDIA. NVIDIA has got to stay ahead of the game because even though I thought it knocked the cover off the ball, I mean, in every way and form, and I would have thought, Danny, that stock would have been up 20%, not 10 or 11. In other words, there is no more perfect report, I think, than that NVIDIA report, but it just shows you how priced for perfection this company is becoming.
Well, it's already been baked in. I mean, look at this enormous run that it's had. You know, it's interesting. We sold a bit of NVIDIA not long ago. We do own the stock. We've been in and out of it, taking
we trim
profits.
It out. We take profits. You know, and I think that's great about what we do is that keeps us actually level against all the hype, because if the stock is overbought or oversold, we're going to manage the position. We just don't let it sit there overall.
Well, so, I think the other caveat to that, though, is what if it was not perfection with this report? I mean, it could have dropped 10 or 20% on the other side of this.
I think it would have. I think if it would have missed, it would have been off dramatically compared to how much it went up.
Look, it's been on a meteoric run up to over 200% the last 2 years. It's been fantastic, but it was also down 50% in 2022.
I know,
and I think it was down much more than that at its very worst. So you know, it's one of those things to keep in perspective, and that's where I think that active money management really pays in the sense of, yes, you could have been better off holding, but you know, once we start getting these reports, and as you said, it's priced to perfection, that can create, you know, some downside that maybe people aren't expecting. And then what happens, because nobody's used to it going down anymore, ever.
No, right. And I'm not saying like the AI story or narrative is over. I just think you're probably in the middle of it. So Alphabet, Amazon, Meta, Microsoft, they're pledging $200 billion this year to artificial intelligence, hyperscale data centers, chips, gear, personnel, right? So this is huge. So, and Lance, I think, talked about this maybe with Michael yesterday about some of the themes we use as far as the building of the infrastructure in our portfolios. So, but the one thing I said to a client yesterday, when the internet came out, I said, oh, this is pretty cool. I said, this is actually going to increase productivity for workers. But AI sort of scares me, is that it's going to replace people. I mean, you'll have an increase in productivity only because you're going to be letting people go. You're not going to need as many bodies anymore to do the job, right? So, in some ways, AI is, you got to almost have to reassess your career and your career path and what you're going to do, because it could be additive, or you'll be working at Cracker Barrel.
Oh, you better get used to working with your hands very quickly. I mean, learn a trade. It's something I think that we already lack already, and there's not been the push for that as much as there should have been along the way. And I think that's going to be an area, though, that is going to be very difficult to duplicate.
And I got an idea for the CEO of Cracker Barrel. Instead of a chocolate fountain that they have over there at Golden Corral, a cheese barrel, a cheese fountain, and you put your biscuits under it.
Wasn't there a place that tried that?
I don't remember.
No longer here?
That was Brent's house.
The melting pot?
Brent's house.
Yeah.
Fondue. Ugh. Be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Well, I think, again, the Fed put the damper on, and bonds put the damper on the market yesterday, except for Nvidia. So I
Did
guess...
they really, though? What they say that was so different?
It's the assessment that the Fed's not going to lower rates this year. That's something I've been saying since January. I don't see a reason for the Fed to lower rates. But now I think the story is shifting a little bit, Danny, to where is there a rate hike in the future? We had some, we had the Purchasing Managers Index up. We have still unemployment at lows. The economy is still strong. Listen, I just think it's a tough buy or a tough sell for the Fed to lower rates this year. I just do. I think AI is incredibly disinflationary when you think about it, because you're just going to be getting rid of a lot of people. But while you're in this process of infrastructure and all this money being spent, I don't know. I think it might keep inflation at this level for a while, and rates have to be higher for longer. Maybe rates obviously don't go higher, but maybe they stick around. But, I looked at new housing starts. I was sort of shocked. Toll Brothers took it on the chin. People are just not buying homes. They were buying new homes. The story was, not a lot of inventory on the secondary market, but yes, on the prime, the new home market. But now that's slowing down quite a bit when you look at the numbers. And then look at Target's report overall was a challenge. So there's definitely pockets of the consumer really taking a breather.
Is it pockets though, or is it becoming more, the whole economy in a sense? We've seen these pockets already. We look back and look at the credit card balances, you look at delinquencies, you look at debt in general. You can see the writing on the wall. However, it just never seems to come to fruition. So now is that what we're finally seeing, where these retailers are hurting? Is stimulus money finally gone? What are all the factors here, right? Are people no longer able to tap their credit cards?
Well, you see, I think it's just weird. I think it's based on generational spending and how much money you make. And do you own your home? Like older baby boomers, right? They've done well in the market. Their housing wealth is up. They're spending. And then you have, the lower middle class that are just hurting. So when the CEO of Target announced that the soft trends in discretionary categories, but also said they were cutting prices on everyday things like milk, bread, paper towels, diapers. So it's not just discretionary spending on the Target side. Yes, that hurts compared to the grocery business at Walmart. So to your point, you have one element of the economy that, or a percentage of the economy that's hurting, But then you have these baby boomers that still have money, and they're out there spending at restaurants and doing everything that other generations cannot do because they're invested in the market and their housing wealth is increased and their debt levels are low. So I don't know. This bifurcation could last a while, but to your point, you got to look at where most of the working class is, and they're hurting, and it's now starting to show.
Yeah, but the things you just mentioned are things people. Those aren't wants; those are needs, right?
Yeah.
So are they going to Walmart instead of Target? Are they using coupons? Are they going somewhere else?
I was sort of shocked by that line that when they said discretionary, and then they're throwing in everyday items to cut prices. Maybe that's like a loss leader. Like, in other words, maybe they're thinking if Walmart's doing great with groceries, if Target cuts the price of bread and all that, people will go and then buy some of that discretionary stuff that they don't need. Like some of the hideous clothing at Target. I call it the I give up collection. That's what I call it.
Give up collection?
Yeah. It's like I don't care what I wear anymore. So yeah, again, I think it's just conflicting data. So I think Lance mentioned this, we mentioned this. As every piece of data comes out, the market's going to extrapolate. Is this stronger or is this hotter or not? So you have these hot pockets of the economy and these cold pockets. It's like how I used to warm up a chicken pot pie. Most of it's frozen. Frozen in the middle, hot at the top. What a mess.
But I think that's what the challenge
Not
has
a Cracker Barrel, though. You all make a good... Sorry, go ahead.
No, but that's been the challenge. I mean, you think about this. We've had so much data that has been conflicting where you get some really hot data that's really strong. And the interesting thing is we're at that point where the market has been taking that as negative, right? Because now they're going to wait to cut. And then the opposite, when you get poor data, which you would think, hey, we don't want people losing their jobs. We don't want things slowing down, people struggling to make ends meet. But that data, the market seems to like. And, historically, though, if you go back and look at history, when we're in that cutting phase initially, it doesn't bode well for the market historically. But for whatever reason right now, it seems like the market feels different. And I don't know if this time is different or not.
Right.
That's, I think, what it's going to be the major challenge is that how bad does data have to get before they start cutting? Or do you need that major event to occur before you really see? And then they cut quickly and we still get that drawdown. And then, we get back to get things back on track. I don't know. That's going to be the difficult challenge I think that we're all going to be faced with.
Like you said, with all this money going into building out infrastructure and I understand there's COVID stimulus cash isn't out there, but semiconductor bill, if Biden gets in again, there'll be more cash thrown into the system. I mean, I think I heard Kamala said, we're just going to send you money. I think that's what she said. She sounded like Mattress Mac. So instead of saving you money, send you money. So they're not hiding that. So you're going to have that fiscal side still on fire and the Fed in the wait and see. And I just think the market gets whipped around quite a bit based on the situations or the numbers that come out. And as an investor, that's going to be unnerving because I said this, I think this is when we were on a partner call yesterday. I said, listen, a monkey could have made money in the market this year. That's going to change eventually. You're going to have a sell discipline and an ability to manage your positions and not be so complacent. Or maybe not be overreactive, and investors tend to be reactive to begin with. How do you stay steady while everybody's reacting to good numbers and then the bad numbers? And is bad good or is good bad? It's confusing.
It is extremely confusing. But, we know the narrative for the moment, so you play the game, and then once it changes, you need to be prepared. That's, I think, what was going to be so difficult moving forward is just that, Rich. I mean, we'll see how this plays out. But I can tell you this, for as negative as so many people have been for so long, this just shows how we can't let our emotions get in the way of what the overall market's doing.
No.
Bigger picture.
And speaking of markets, Dow futures are up 42, S&P futures 14, NASDAQ futures up 55. So, I mean, seems like we're on a steady positive note this morning. We'll see what happens overall.
Yeah, bond yields up slightly, like 2 basis points.
I think the 2-year, what's the 2-year now? Isn't it close to 5?
think so.
Marie, if Biden wins, the end is near. If Biden wins, I'm going to Cracker Barrel for a job. I'm not coming back here anymore. Get a free breakfast. Eggs will be $12 a dozen. I don't know. It's going to be interesting. But most important about this conversation is I've always come across investors, and I said this last week, and I said this to an investor yesterday who said, if Biden gets in, I'm out of the market. I'm like, listen, you can't do that. You cannot put your money where your political views are. You're going to lose. You are going to lose. Look at the data. Remain impartial. You want to make money. That's your job. That's your goal, to make money. And if you're going to do it by who's president because you're ticked off or you're giddy happy, it is going to work against you.
How many times have you seen that, though, on both sides of the aisle? When somebody gets elected, they're like, I'm getting completely out or I'm going to get completely in. And that's not always what necessarily happens. I mean, sometimes economic policy, red tapes, regulatory items take a long time to change. And so that narrative may pick up at some point, but for things to actually come to, to be is going to take some time. But not only that, these policies that they enact, many times, a lot of it's just rhetoric. It's not actually something that they can actually physically get done. And we're hearing a lot of that right now. I think a big concern is this taxing of unrealized gains, looking at raising the capital gains tax rate. People are really concerned about that. I don't know if that comes through or not if Biden gets reelected here.
Taxing unrealized gains, it's the end of the world as we know it. I think a lot of it is rhetoric. When a sentence comes out that I can understand, I think it's rhetoric. So, but you can't react to your point. You don't invest based on those views or that language. You got to keep it at an even keel, especially people who might be retiring. Think about this, Danny. You have people that are retiring into a presidential cycle or change, and frankly, it's affecting them. It's affecting their decision, even though a plan will say, or I ran a plan for clients the other day, and it says, they both want to retire together, and they're young, they're about 70 years old, and they like working, but they're like, hey, we want to do other things now. And I said, well, you have enough money to do it, and it's like, we're going to wait for after the election. I said, well, and it's not the first time this comment's come up, and I said, well, that's fine, but what's going to be different about your situation? Because your plan works. So however you choose to do it is up to you, but I wouldn't use the election as your reason or excuse.
Yeah, absolutely.
We get back, we'll talk to you about naming an executor. There's a lot of clerical stuff about it, and we'll share some insight with you, but boy, there's a lot of emotional stuff with it as well. When we get back.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that candy coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Food in total is now making up 30% of the average discretionary income.
I believe it. I mean, that is our largest expense is food.
Yeah.
And we rarely eat out.
The Real Investment Show podcast.
Our biggest frustration at home is how do we do this cheaper?
Yeah. No, I agree. We're running Hunger Games at our house.
At realinvestmentadvice.com.
So, if you can make it to the table without getting killed, you get to eat.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back. So, you have a will. You've done all the things you should from your estate planning perspective. But there are a few things that I find, there's the logical progression of what you do as an executor, right? You fulfill the final wishes, settle affairs of a decedent. It's very important. It demands responsibility. Ongoing responsibility, and making decisions based on those final wishes that may not be, let's say, accepted by other members of the family. So appointing the executor is not easy, actually, because you need someone that has the mental tenacity to follow those instructions that you set forth in the will and make sure the money's divvied out. The executor becomes the brunt or the whipping boy for a lot of, say, issues that family members may have. The speed of how which assets are processed, and that has nothing to do with the executor. It could just be doing with the process, and they don't understand the process, the beneficiaries. They don't understand how that all happens of probating the will, and they bang on the executor. I've seen this happen so many times. Or the executor is a family member, and then people feel animosity because they feel like this person has control over me or my parents' estate, or I don't like it. So so there's all this clinical stuff on how to do it, right? Collecting the assets, paying the debts, being the responsible party to divvy it up, set up separate accounts for the estate, keeping track of things, right? Maybe you working with the estate planning attorney. But Danny, think about all the turmoil an executor may have to deal with. Especially what I find very common, and I tell people don't do this, is the executor becomes a surprise to people who are receiving the money. You name who? As opposed to, say I want to name Danny as my executor, and I don't say anything. Well, I should be letting those people know, those beneficiaries know, well, here's my executor decision. Here's why I selected this individual to do it. And what if my family members go, well, I could have done it? No, I don't think you could have done it. See, I'm pretty blunt. I don't really care. Most people are going to like,
That's why you're my executor and trustee.
dance around the edges, right? Think about it, right? They're going to, well, I love you and all, but, remember that time you stole the car and you ran somebody over? It's just, you have to stick by your decision and have reasons for that decision, because some executives go through a lot of trouble. As a matter of fact, I have an executor right now who had to work with sisters. He was appointed. Those sisters won't talk to him anymore. They are so upset how long the process took, even though he explained it, why it took so long, going through the courts. He kept them communicated every step of the way. For every problem that they faced, they blamed him and their mother for selecting him. He was always the favorite. It brought up like this family turmoil that's been buried for years, just because they named the young brother as executor, who just, by the way, did a great job fulfilling everything he needed, and is very sad that his sisters won't talk to him, Danny. But he goes, I did what my mom wanted me to do. The courts are all messed up. I got assets in different states, different rules. I kept them all abreast, and all they cared about is they want their money. Why is it taking so long? You were never responsible. He was always proactive. And now his sisters, and it looks to me, I don't know what happens because I'm no therapist, but it looks to me like they will not talk to him again. Not only that, his nieces and nephews won't talk to him anymore, and he was close with them all because it's just, this is maybe an extreme example, but this happens.
I think we've all seen this happen, especially with what we do in our line of business. The problem with this is that, to your friend's, he's probably not at fault. He's following the rules.
He's not. He did everything.
And the problem is that they're the messenger, though.
Yeah.
Hey, mom and dad only gave you this. They didn't give you that or this much of it. And so now he's the bad guy, right?
Right.
But he really didn't do any of that. So the parents
are
really to probably blame, because they should have been more communicative.
Well, he said, I wish
this.
my mother would have shared.
Yeah.
I explained to my mother, you really need to let us have family meeting together with you. And she just felt, you'll take care of it. Like, in other words, she just shifted all the burden. She didn't want to have the conversations.
Yeah,
so
but
she left it to him, but she ruined their relationship.
But yeah, that's probably the last thing she wanted to do. She just didn't want to get, ruin the relationship she had with the kids.
I agree.
Or, most people are non-confrontational. They don't want that. And so it's always tough too when you're talking about, kind of your life's work, what you have there that's outside of memories, physical, tangible things that you've worked hard for that the kids may want. And I think that's a struggle, and that's unfortunate that happens. But you see this all along the way, Rich. I had somebody the other day who, like 2 years later, says, "Oh, your loved one took too much from social." They were double dipping, getting Social Security and disability at the same time, and weren't supposed to be getting them both. Mm-hmm. And essentially, the estate was required to pay it back, but they didn't find out till way after the fact. And so now you've got to start to unwind things you've already worked so hard to do. So this can be a struggle, and it's not for the faint of heart, because there are so many moving parts. Like you mentioned, especially if you start talking about, intrastate stuff, getting things across state lines and things with different state taxes, not just estate taxes, but state taxes and rules. That can be a challenge. That's what I think is tough. But the at the end of the day, I think the bigger part of this is the relationships that are severed because of this. That's what I think is probably the worst part about this.
Absolutely. So you could talk about all day the role and responsibility of an executor, but the ongoing stress possibly could be an issue. That's why a lot of people don't want to be the executors. Oh, no, I'm not dealing with that. Because of situations like this.
But also the legal liability. I mean, somebody could tie you up in court because they could say, Rich, you were supposed to give X amount. You denied it. You didn't hold up your responsibility, or you didn't do so in an expedient manner. And that's the problem with this kind of litigious society that we're in now, that anybody for anything can go and take you to court and, just tie you up. And that is an issue too. And I think that's why people typically shy away from this. People have asked us for years, hey, would you be the trustee? Would you be the...
Right.
Like, no, we can't do it.
I don't want that headache.
No.
I would love to help you, but you've got to find a friend or somebody or a relative. Well, you have to have pre-executor sessions, don't you? You really do have to have multiple conversations with your beneficiaries, your heirs, to say, here's why. Watch how the interactions occur after the fact that you've said you've provided the information. Is there any change in family dynamics that you're noticing? Passive aggressive behavior.
Well, but also there could be a conflict too.
Choking your little brother before he gets to the.
But as somebody who's managing money, and then you're also in the flip side of this, doling out money. I could see where somebody didn't put out as much for whatever reason. But I always say, look, utilize us as an advocate. Let's work on this stuff right now and work with whoever's going to be the executor or the trustee and bring them into the fold so they've got a really good understanding. Happy to have those conversations, make introductions, and kind of bridge that gap. I know you've had, some kitchen table conversations with clients around the estate, and you find out a lot of times that what the parents thought that the kids wanted, that really wasn't the case.
No.
Or vice versa.
I've also had situations where the executor selected by the parents or says, no, Mom, I'm not, Dad, I'm not doing it. I don't want to do it. But you're the one who's qualified. I don't care. I'm too busy. I don't want to do it. So this becomes a big job. I think it's almost the same as some people have a very tough time, young parents, selecting guardians.
That's a tough one.
Right? Like having that conversation with your wife and you're thinking you want this group or this family member, but she wants or he wants this family member. I would think that guardianship discussion is just as difficult. What do you think?
Oh, I think that's extremely difficult. I mean, we have to have that conversation frequently. Like, her family's not here. My parents are older, and I don't think that they'd be up for it. They say they would. I'm sure they'd step in if they needed to. But that's something that, we are always kind of reassessing. And, okay, what happens if something happens to us? How do you not displace the children so much, put them in great care, and then have somebody who can monetarily watch over with the funds that you've left, right? And you don't always want that to be the same people, right? So, like, the guardians are different than like my trustees.
Yes. Oh, yeah. And but I mean, at least you all had this discussion, but it's very difficult because when you say, wait, you don't think my sister can handle it? You don't think my parents are, it gets ugly.
Well, they're across the country. You're going to move the kids and displace them after already a hard emotional time, right?
Yeah, at least you had that excuse because we know what would happen if they were here. I'm not saying anything. All I'm saying is stay tuned for the next segment.
Can you talk about my in-laws?
I'm not.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These
businessmen promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So somebody posted, and I thought it was, a bunch of crap, that there was a scheme to sell Graceland. Like they were going to lose Graceland. The granddaughter, Riley Keough, was going to lose Graceland. Did you read that story, Brent? Yeah. So it's just that, well, first of all, let me just say this. I am amazed how bad the Presleys were with money. I am shocked on how much in debt Lisa Marie was. And the only thing that this family had really going, and after all the millions and what Elvis represented, I'm a big Elvis fan, okay? And I was shocked that all the debt that they take on. So they said that, Lisa Marie borrowed money, put Graceland up as collateral. So this company, Nosani Investments and Private Lending, LLC. So I even looked it up on, Google it. I just went Google and I could not find it's supposed to be this investment company, and that this company lent her $3.8 million and she never paid it back. And it sounded sort of like Lisa Marie. No offense, but, when you read through her debts and how she lived and her, it seemed like that could have been feasible. But then the notary on the document was from a woman in Florida who said, I've never notarized these documents. So obviously the whole thing was fraudulent. To me, from what I see from the granddaughter of Elvis, Riley Keough, she seems to be with it a little bit more, or looking at it as a business, because Graceland brings in enormous amounts of money. So they just wanted to came in. This was notarized in 2018. This notary, Kimberly Philbrick, has denied. She goes, I never met Lisa Marie, nor have I notarized that document. Then I think about, wow, it's just so easy to be caught in a situation like this. And again, I'm just trying to look at it from a financial perspective. I'm Riley Keough. She's a young woman. She's sort of talented. I mean, she's a good actress. She's now handling this entire enterprise for them all. I mean, yes, she's got people who help her, but this is not a businesswoman who now handles this huge Elvis Presley Enterprises, which operates Graceland. I cannot remember offhand how many millions of dollars Graceland brings in, but it's something astronomical.
Is it?
Like, I think like 100 million or something crazy like that. It is a business. So this was a fraud, and she got on it like right away. So because she controls her family's trusts, and that in that trust operates Graceland. So think about it from the executor kind of position. This woman's in her 20s. Yes, she's got. Think about having your children in their 20s. All of a sudden handling these kinds of responsibilities. That's overwhelming. I bet she had to be a bit, even though with all the advice she was given, a bit overwhelmed by this lawsuit. When you're served these court papers filed in Shelby County, Tennessee, that this was a promissory note and this is what we're going to do. We're going to foreclose. I mean, I was looking at it from that financial management and oh my gosh, I'm in over my head here. What the heck do I need to do?
Yeah.
So Priscilla seems like her grandmother seems like a fairly decent businesswoman. She's the one who actually set up this Graceland Enterprises and this whole visiting Graceland thing. So it's just really amazing because I thought about it from, oh my gosh, here's this 20-something-year-old. Most 20-something-year-olds are still living in their parents' basements, and she's got to handle this. Oh, so 2022 operations at Graceland generated at least $80 million. And the family trust retains 15% of Elvis Presley Enterprises. I mean, that's not chump change.
No, not at all.
And I think what happened was Lisa Marie had to sell off a portion of the ownership. That's why it's only 15% because of her debts that she got into and all the things that she.
Which is amazing. If you think about something like this that you own, right? That you have access to, that is generating income of this magnitude.
And it's really just not just any property. No matter how you feel about Elvis, he was an icon. He did change the whole scope of music.
Well, yeah, and I'm sure there's still royalties, lots of different things
coming
in.
Gosh,
I mean, but think about that, $80 million a year, and you've got to go out and get loans, and you're mortgaging that? I mean,
so it says Lisa Marie established the trust in 1993. Its assets grew to more than $100 million by 2005, but she compiled massive debt, forcing the sale of 85% of Elvis Presley Enterprises to help pay her debts. Talk about not having financial literacy in the family. Because when Elvis was with the Colonel, all that money, now Elvis was a spender and he was a giver, but then he was also sort of financially abused. He could have done other things that he was prevented from doing. But think about what kind of bills you have to have, Danny, and how irresponsible you are that I am in charge of this icon's estate. I had to sell 85. Think of that was your dad. And you had to sell 85% of that just to pay off the bills for crap that you bought and things that you did because you're living this lifestyle. It really would make me sort of sick.
I don't know, because I'm not sure that if you've gotten that far, if they really care. Like, it would make me sick.
I think we would care. I think we would. I mean, I think a lot of people would care, but I guess you don't have that kind of perspective. Or you learn money from your dad when mom's not involved. But you think about it, you had to sell off 85%.
Or they think the money's always going to be there. And that's the problem that we always talk about. And, we talk about estate planning and how to protect your kids from themselves. And
yes,
the best clients with their kids, the clients who their kids are best with money, excuse me, they communicate well.
Very well with their children.
They communicate extremely well. And so that is something, though, that maybe was not done. Clearly not good enough. Mm-hmm. But you know what? All the reports just show how many generations do funds last.
Yes.
Usually by the second and third, it's gone. Third, it's completely gone.
It's gone.
And that's almost what we're seeing here.
Yes. Think about how much work you would have to put in to spend 85% of Elvis Presley Enterprise, the $100 million. I
mean, I think you could do it. I
would get a groin pull, a fiscal groin pull from that. I mean, what am I buying and what kind of life am I living?
Well, you're probably surrounded with the wrong type of people.
I would think that's part of it.
And you have a lot of yes people, and they're encouraging this lifestyle. Albeit, and we see this though with retirees right now, where maybe their friends or people they've known forever, they have a little bit more money than they do, and they travel more, and they go on more lavish vacations or have a little bit bigger home, and people get out of the side of those guardrails. And it's easy to do. And then you do a little bit, then all of a sudden it's a little bit more. And it adds up at the end of the day. And that's probably what happened here.
It's a very, and I don't mean this disrespectfully, but from fiscally reckless family. What I hope, get a hold of you, Riley Keough. I'll get a hold of you. I hope maybe the granddaughter is the one that actually is fiscally responsible and understands the magnitude of what she's handling eventually and continues to keep this growing. Maybe this was in some ways, something like this could be a wake-up call. Like, oh my gosh, I've got something here that is a target as well. Well, actually, Graceland as a target would probably be pretty cool. What would you buy there?
That's something that everybody should be considering, right? Like, we're all a target.
Where would they put that red dot, that red bullseye right on the front door? No, go ahead.
No, but we're all a target, right? I mean, this can happen to them. It can happen to anybody. And you think there's probably extra parameters and things set up for protection on
You mean for my $85
like
as opposed to $85?
Correct, yeah. Hey, man, it all adds up.
It all adds up. So Elvis bought that house. So the funny story, because I do know some of Johnny Cash's family, but the funniest part was that house was a pastor's house in 1957 or so. And he bought that house then for $125,000.
Wow.
But it was offered to Johnny Cash first. And Johnny Cash walked through it and says, it's sort of feminine. This is more house for Elvis. Because Elvis was very fancy. Elvis liked all the fancy good stuff. Johnny Cash was sort of more rustic. And his house was very rustic. So I think he was more chiding it more than anything else. Like, no, I think this is more of Elvis's speed.
How big is Graceland?
Gosh, I don't know. I was going to say 10,000 square feet.
No, it's on 14 acres, but...
No, I know, but they have a lot of different properties. I want to go so bad. I have never been. No,
really?
No.
As much time as you spend in Tennessee, I'd have figured you've been there.
Because I always go to Nashville.
Yeah, further north.
So, but I definitely am going to make that trip. And if I get a hold of Riley Keough, I'm going to say, listen, I got somebody for you to talk to, and I'm going to call Danny. He's going to give you the lowdown on what you need to do. Danny,
it sounds like she's doing a better job than most.
Well, it sounds like if you're going through a situation like this and that magnitude hits you as to what's going on, then yes, maybe this is a good thing in a way if it keeps her aware of what she's got and the financial kind of responsibility that she has.
Yeah, I agree.
I think Lance's house as a tourist attraction would probably bring in $2 or $3 million a year. What do you think?
People go to feed the alligators.
They feed the alligators in the moat, the tigers in the backyard, and of course to say hi to Mrs. Roberts because that's the best part of the tour. Even though she tends to always avoid me in the hall. Hi, Mrs. Roberts. And where's she going? Hey.
She's like, who is this guy?
She's the best. You all have a great weekend, great Memorial Day. And Lance is back Tuesday. Take care.